Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office on yet another snowy December day, and then it's just going to get pretty stinking cold. It's just going to get pretty stinking cold this weekend, and like justifiably complaining cold, like sub-zero cold. And because I'm foolish enough to attend Bears games, regardless of temperature, we'll be testing the willpower here on Sunday. Should be pretty interesting. Perhaps, though, where it's a little bit warmer, joining me for today from Wichita, Kansas, our Director of Feed Foundations, Mr. Jay Kingsley, and then from way down south in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl. No doubt Prather team. How are we today?
Doing pretty good.
Doing great here. We've managed to dodge a lot of those snow squalls that were coming past today.
Yeah, they go north of you, Verl.
Way down south. Yeah, that's a good point. So they were just north of us.
Glad to hear you missed it. And then Jake, in the land of hard red winter wheat, how are things down in Wichita?
Pretty good, really. A little bit warmer here. I think we're going to get cold. Not quite as cold as you.
Sure.
My son wakes up every morning disappointed that it has not snowed, but he's only 3. So we're going to let him suffer for a while in disappointment.
Wow.
And the hard red winter wheat crop down here is looking pretty good because they got that stuff in the ground. It got established, and then we caught like an inch or 2 of rain on most of it. So it's looking pretty good at this nice little start of the dormant window.
Okay, and so Jake, and just for the viewers and listeners out there, you are working with some ag crop nerds out there because we got into a borderline fight. We got into a little bit of brawl earlier before we started recording over Chicago soft red winter wheat versus Kansas City hard red winter wheat, excuse me. So got a little bit of a battle, but let's just say we're all one big happy wheat family. Jake, can you just touch on this for another moment here? So we plant our winter wheat crop in the fall, correct?
That's correct.
Comes out of the ground and then enters a period of dormancy. Is that accurate?
That is also correct.
And then Mother Nature, in its own way, at times or not, will help protect that dormant crop by covering it with some snow to avoid winter issues such as like winter kill, for instance. Well, right when we get so stinking cold, it kills off some of that dormant crop. But it's good to have that nice white blanket down over it, doesn't it?
It does help. Yep. We haven't gotten that cold yet, but if we're going to get down into the single digits for an extended period of time, it'll certainly help to have a little blanket of snow on it.
Okay, excellent. Okay, and then Jake, you did note that folks are willing to pay a premium for that Kansas hard red winter wheat. Why is that, Jake?
Well, we've now moved on from agronomy 101 to plant science 101, maybe? I don't know. But hard red wheat has a variable amount of protein in it, and that's typically what you're paying for. Your Chicago soft wheat is a little lower protein value, so.
Gotcha. So folks are paying up for that higher protein content here for that hard red winter wheat as opposed to the soft red winter you find in the central Midwest, Eastern belt, if you will, versus down in the plains.
A lot of years they are, yep, if the market's calling for it. There's some days when it's at parity, but
sure,
typically we're the better product, yeah.
Okay, excellent. Well, hey, for those tuning in, if you did not know enough about wheat, I hope after today you learned a bit and you know a little bit more. And it's really fun conversation to have around your holiday dinner, share with some friends and family, some trivia, test their wheat knowledge. So think about that as you're heading into the holidays. We do have a lot to run through today because we had a big WASDE report yesterday here from the USDA. We are back, knock on wood, on a monthly cadence for that WASDE report. But first, we're going to switch things up today. Michael, if you could please kindly timestamp the broadcast. Jake, Hard Red Kansas City Wheat Kingsley, is going to give us the market rundown today because it's almost 1:30 Chicago time. Wednesday, markets have closed. Jake, where did we close it today at the board?
So the Kansas City wheat contract closed at 523 and 3/4 for March. The soft wheat out of Chicago finished the day at 529 and 1/4. So actually a little bit of a premium there in the futures market. But I'm a basis guy, and that's what really counts.
Amen, brother. How
Oh,
we do on the corn and bean and meal settlements today, Jake?
right on. So everything here is March 26 contracts. Corn closed out at 444 flat. Soybeans finished out at 1101 and a half. March meal down to 306 even. Soy oil at 51.61, up a couple cents on the day. And then crude oil at 58.18 and feeder cattle at 332.82.
Okay, there you go. Hey, man, that's an efficient rundown right there. We covered wheat right off the bat. Then, of course, our other feed products, then dive into some livestock and energy markets. I think it's really important to hit on each of these because, for one, we had the WASDE report yesterday. We had the Federal Reserve announced just before we started recording today that we are going to cut interest rates by another 25 basis points. So, largely as expected by the market. I think futures were projecting a 90% chance of a 25 basis point cut in the Fed funds target. So interesting to see how that might impact the macro markets. But focusing on our grain and oilseed markets here today, Verl, we had that WASDE report come out yesterday. I would say, I don't want to say it's a nothing burger because ultimately markets have reacted somewhat, digesting this thing a day later, right? In terms of how both corn, I think, behaved versus how it initially reacted after the report, but then beans as well. You know, the soybean balance sheet, you could argue in the US, we literally did nothing. Corn, we raised exports while touching virtually nothing else. So, Verl, what is your take after digesting WASDE for a little more than, we'll call it 26 hours or so? What are your thoughts?
Yeah, I think the market had a little bit of anticipation in seeing this report based on, it just kind of felt like this was the first real WASDE we were going to receive after the government reopened. Obviously, we did get a report back in November. However, the government had only been at their desks for about a week or so, if I remember correctly, before they released that information. So they've had plenty of time to kind of put the numbers together to release the new information for us here in December. And yeah, I think if you're a corn bull, you've got to be a little bit disappointed that production was not touched whatsoever. Yield stayed the same as we saw in November. And, obviously they did raise export demand by another 125 million bushels. That was kind of well expected to see, anywhere of a bump from 75 to 100 to 125. I mean, as of the first week of November, total commitments of corn exports have continued to be very, very strong. We're about 200 million bushels ahead of schedule, as a matter of fact, back then. Looking forward, I do think one of the things that caught my eye on this WASDE report was some of the changes that we saw actually to the 2024 corn balance sheet that kind of went behind the radar because that balance sheet has all but closed out as of September 1st. But they did lower feed and residual yet again by a small amount on last year's demand sheet. And that remains a massive question for this 25-26 crop year. How in the world are we going to get to 6.1 billion bushels of demand for feed and residual? I think that's a question that this USDA still has to find some answers for. However, it does feel like there's some sort of premium built into this thing and a lot of pressure coming into this January WASDE report to see what happens to the production side.
Yeah, and I think Verl, you noted that we have been watching the corn export pace very closely, and you specifically, Verl. I mean, you send out a report virtually every Thursday after we get weekly export sales, and then Monday's export inspections to kind of give the team internally a sense of how we are doing versus our historical pace, but also versus what the USDA is projecting in terms of total sales and exports for each marketing year. And as someone who would, for the sake of our dairy and livestock farmers, right, those feeding grain, feeding corn, there's a hope that we continue to stay under some pressure here in the corn market. But I think for those row crop farmers that are growing and producing and selling corn, right, we're looking for a reason to run this market a bit higher or try and keep it a bit elevated. This export story is helping do this, right? We're not taking off to the moon. We're not running March corn to $5. If anything, we continue to find some resistance, I think, at 450 on the March contract. But it is hard to ignore the export pace that we've seen in this corn market. And Verl, we talked a lot about, the impressive pace to Mexico. We've talked about Korea. We've talked about Japan. But yeah, it has remained very strong. I mean, Verl, are we potentially setting, are we on pace for an export record here at this point if things trended in this direction for the marketing year?
Yeah, yeah, it appears so for corn especially. I mean, obviously soybeans is not nearly the case. We're incredibly behind the pace needed to even meet current expectations on soybeans. So a lot of concern there. But yeah, I think you're exactly right. Ultimately, um, there is a level of support that is within this market that you probably would not tend to see with a 2 billion bushel ending stock number. Um, and it's being built by the strength in exports, right? I mean, I think the market's very cognizant in believing that, hey, if we drive this corn price too low, um, we could end up sending a lot more corn out of this country than maybe we're willing to do.
Yeah, and I think the watching, especially like our ending stocks, it's holding at 2 billion bushels, like you said, for corn. We're flirting with it, right? Like at this one, we're just over it, but that's a very psychological number. But even if you were to break 2 billion and get to 1.9, I mean, it's still a very you could argue a very large balance sheet. We have plenty of corn here, but I think as you look at our stocks to use ratio, right? I mean, I'd say it's fairly steady. It's up a bit versus last year. I think it's up a bit, maybe its highest level, I want to say since the 2019 crop year. We can go back and edit this out in case I'm wrong on that. But it's one of the higher stocks use ratios of the last six, let's say 5 or 6 years. And like you said, though, and yet we're just holding some support here. Where are we taking off to the upside? No, but for those feeding corn, we would love to see a pullback and have a chance at $4 again, especially if you're going to have a 2 billion bushel balance sheet and the highest stocks use ratio you've had in 5 or 6 years. But man, that export pace remains really hot. So really interesting to watch there. And then, Verl, just as you said, not the case for beans. And it's tough to not beat up this storyline, but we just have to continue to point out this whole deal that we had with China and their supposed commitments to buy beans from the United States. It's still, and we're recording on December 10th, it's just not panning out the way that I think folks initially thought. We do not have up to speed CFTC data yet in terms of the commitment of traders. So we don't know exactly where the funds are positioned on beans. But Verl, you'd have to imagine that funds got pretty long or net long this bean market when they ran nearby beans up under the assumption that that China would indeed fulfill this commitment. And really, since then, it has been a pretty decent descent lower as we move through the end of November and into December. Jan beans breaking 11, March beans just right at 11 now. It's been a big move, and I think part of it is right, Verl. We're just not seeing this export market live up to what we had thought. And at some point, you'd think the USDA is going to cut exports further. Do you think that would potentially happen on the January WASDE, Verl?
Yeah, I do. I think it was probably well deserved on this report, to be perfectly honest. I was
Yeah.
surprised that they left it at 290 million or 290 million bushels of ending stocks. But the reality is this soybean market got way too far over its skis, right? In my opinion, there was no good reason to trade 1170 futures on this January contract. And here we are 80 cents from there, about 2 weeks after the high. And the reality is even if China comes in and does buy that 12 million metric tons, we've got to be careful not to overprice ourselves and basically not find any other export business from other global buyers of soybeans.
Yeah. Yeah, it's going to be a really interesting stretch. And I just wonder if for this December WASDE report, the USDA thought it was just too soon to show too many cards at this point and just, say, hey, we're not going to see the pace that we claimed that we were going to see. Maybe they just wanted to give this another shot because there is continued dialogue from Secretaries Bessent on the Treasury side, Rollins on the ag side. Even the president himself continues to bring this up here and there. But I think we also saw that aid package released or at least announced, first half of this week, that 12 billion. I think we could get into a lengthy debate on what exactly that covers, and if it is substantial enough to benefit our farmers. We'll save that for another day. But I think even acknowledging that they're going to release this $12 billion in aid, a lot of that presumably is going to be for soybean growers. There's potentially a sense of we are recognizing we're not going to hit nearly of an extensive export pace as we have in the past. So it's going to be super interesting. I guess, Verl, between now, January WASDE, how do you see this market behaving, corn or beans?
Corn, I think, is probably pretty range bound. I think the trade wants to see what happens on this WASDE report in January with production. On the soybean market, I think we've got a really good shot at going and filling that gap from the end of October. That would take January beans somewhere in the range of 1060.
Okay. Yeah. And just to think of what a drop that is from the highs we saw. And the reason we gapped, right, was because of the announcement and assumptions that we were going to then fulfill this rejuvenated export program, right, between us and China. And so you saw those markets really take off. And it has been a swift move back now over the last, let's say, 6+ weeks when we created those gaps. So, Verl, thank you very much for those insights there. Jake, we've got a couple minutes here to chat some cash markets. As we come out of this WASDE report, you noted that meal, talk about another market that achieved some pretty decent highs on some of this anxiety and anticipation within the soy complex, within the export program for beans, still maintaining a pretty solid export program for meal. But I think we also then saw, we are doing a pretty decent job at continuing to crush beans to produce meal, a lot of it. And prices have largely come down significantly, at least at the board, on soybean meal futures. So what are you seeing in cash protein now over the last week or so, but especially maybe since that WASDE report?
Yeah, so we're starting to revisit some price per ton values that are attractive enough to go out and do some more significant buying, long-term buying, if you feel you need to, and you're comfortable with those values versus what you can produce on milk. Basis has been attractive across most of the country for many months now. Futures had that rally. They've come back down. People are taking advantage of that or starting to cash in on some of the hedges and plays that they made when the rally was peaking out and collecting a little bit of premium from the market from those moves. I think what we really have to study there is what's going to happen to all of this soy oil that's really driving this opportunity for us to buy inexpensive feed. And the questions still remain, what will be the final blending volumes that the government mandates? We were expecting that early in the month of December. We haven't seen it yet. That timeline could have changed because that December deadline was kind of given ahead of the government shutdown. So maybe that's completely shifted now. We really haven't heard any new word on that. And then you also have questions about finalizing some of the verbiage around these carbon credits and the incentives to produce vegetable oil and renewable diesel and sustainable aviation fuel and all of those things. There was initially an expectation that we were going to see a more limited incentive program for foreign products, so potentially Canadian canola oil, palm oil out of Southeast Asia, cooking oil coming out of China, all are receiving the same full benefit as soy oil. And the question is, if and when do we reduce the subsidies that those products catch and make it more competitive for U.S. produced soy and other veg oils? And if you can do that, then these crushers have a lot more confidence in the margin profile at their crush facilities, and they're more ready to turn loose of this meal. But again, right now, prices are relatively attractive. And the last we had heard is potentially they were going to extend those full credit values to the foreign products for as much as another 2 years. And yet the market's been pretty steady through that. So I think if you get some kind of confirmation that there is going to be change in favor of the U.S. soy oil producer, maybe we see another big break lower, and that would be the opportunity to clean up.
Okay. And I think trying to find out when we would get some clarity, I think even from the EPA, right? I mean, that proves to be somewhat difficult, especially as we came out of the government shutdown. And then, I think just even understanding from, different elements of Congress here, if we're going to get any permanent changes in legislation regarding, green energy, renewable fuels. So there are some different angles here that we need to watch. I think the nearest term, right, the front burners, if you will, as opposed to back, is going to be what the EPA decides and gives us on some of those mandates. So that's going to be really interesting. And like you said, Jake, I mean, meal kind of gets pulled in different directions here. Lately, I think a lot of it has been what we've seen in soybeans. But yeah, we need to pay very close attention to its fellow byproduct, soybean oil, to see how that is going to behave. And Jake, on that note, as we move into 2026, I think we'll wrap up for today. We will still have another recording next week, so you're not done with us yet here in the year of 2025. But in the meantime, it's been a wild episode. We're going to give Michael another shout out because I think he's got some work to do in terms of people calling timeouts, helping out with kids and dogs in the background. So big shout out for his edits in advance, but also to Jake and Verl. Really good to have both you guys here. Thanks to the Evrag Insights crew for their support. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.